Cryptocurrency is something that many people are talking about for a variety of reasons. There are many who see its growth and expansion and wonder if it's the future of all currency. Others are a little more hesitant about it because they've seen the market rise and fall quite a bit, and it makes them nervous. Even more people are resistant to get in it at all because they don't trust it, even when it's a big name like Bitcoin. And we're not talking a small group, but a rather large one. Allow us to show you how most US adults are aware of Bitcoin, but said they don't plan to invest in cryptocurrencies. Having knowledge, resisting investment. Names like Bitcoin, Dogecoin, Ethereum, and Litecoin are entrenching themselves in the financial and cultural lexicon. But most people are not ready to take the cryptocurrency plunge. A new poll suggests. A YouGov survey of 1,715 U.S. adults conducted exclusively for Yahoo found that 89% of respondents had heard of Bitcoin, and a clear majority, 57%, of those who were aware would not invest in any cryptocurrency. The poll conducted July 13th to 15th, 2021, had a margin of error of plus or minus 2.7%. Of the respondents who had heard of Bitcoin, 13% said they personally owned cryptocurrency, and 27% said they would consider investing in cryptocurrency. Another 16% were unsure whether they would ever consider buying in. Bitcoin in particular is seeing a growing number of adopters among companies big and small. Marquee names like Goldman Sachs and JP Morgan Chase are dabbling in Bitcoin in various ways. And Amazon is reportedly toying with accepting crypto payments, speculation that sent digital coins on a tear at the time. Tesla previously began accepting Bitcoin as payment, but CEO Elon Musk sparked a firestorm and a Bitcoin sell-off, when he similarly walked back that support a few weeks later. The YouGov poll found that 37% of respondents thought that cryptocurrency will disrupt the stock market, with another 20% disagreeing and 45% saying they weren't sure. Fix the money. In theory, the rise of digital transactions and the precipitous drop in the use of cash should make it easier for consumers to shift forward to crypto. One of the chief arguments in favor of cryptocurrency is that a combination of super accommodative central bank liquidity and runaway government outlays are feeding surging inflation, thereby hastening the decline of paper money. Bitcoin's most vocal evangelists, including prominent investor Anthony Pompliano, have argued that digital currencies are the only plausible alternative. An entire generation is growing up with the awareness that the devaluation of their currency is leading to an inability to get ahead, Pompliano wrote last week in his daily newsletter. People feel like they can't afford the basics. He continued, "If we fix the money, we have a chance to fix the world. We can lift billions of people out of poverty. We can return to free markets where everyone has an opportunity to build a life of wealth, happiness, and freedom. That is what most people want, to simply build a better life for themselves and their families." The YouGov polling data suggests that retail buyers are still far from sold on Bitcoin's upsides as a currency, meaning that crypto proselytizers have their work cut out for them. Most respondents who had heard of Bitcoin did not see the digital currency as part of everyday life. 62% said cryptocurrency would not be useful in an everyday setting, while 14% said that it would be, and 24% were unsure. A small number of merchants and providers have begun accepting crypto for services rendered, but digital currencies are still enormously volatile. As a result, cryptocurrency doesn't quite pass the stable currency test, especially when daily moves can easily hit double digits in percentage terms. Most venues where people shop and conduct their business regularly, the grocery store, coffee shops, restaurants, bars, and places of residence, still haven't adopted Bitcoin for payment. El Salvador, which recently adopted Bitcoin as legal tender, provides a test case of what happens when a society fully embraces crypto. Confusion has reportedly ensued in the Central American country since the government made the decision, and the country's consumers and business owners simply haven't derived the benefit from transacting in the digital currency. That being said, there are many who are investing because, to them, they find it easy. Ease of transaction. More people are jumping into cryptocurrency, many because of how easy it becomes to trade the digital assets. A CNBC Momentum Invest in You survey found more than 10% of those surveyed said they're invested in cryptocurrency, ranking the digital coins fourth after real estate, stocks, mutual funds, and bonds. Some 65% of those cryptocurrency investors jumped into the asset class in the last year, according to the survey. In the same time frame, the prices of some of the top cryptocurrencies have displayed trademark volatility. Bitcoin, for example, surged to an all-time high of more than $63,000 in April, slumped afterwards, and then recently rallied again to nearly $50,000. Among those who do trade cryptocurrencies, the top reasons cited are that it's easy to make trades, it's exciting to invest in, and there's potential for high growth in a short period of time, according to the survey. There are a lot of things that make crypto very attractive. The biggest one is the opportunity to make a lot of money, said Douglas Boneparth, a certified financial planner and president of Bonafide Wealth in New York. Educating yourself on crypto. Of course, there is still risk associated with investing in cryptocurrency, as there is with any other asset. The space may be exciting and cool, said Boneparth, but it doesn't change the fact that you're still putting risk on your money. For people who are interested in jumping in, experts recommend that they first do their research on cryptocurrency to make sure they really understand what they're buying. That's because, while crypto is gaining traction as an asset that can be part of a well-balanced portfolio, it is still unlike any other, according to Ben Wise, co-founder and CEO of CoinFlip, one of the largest Bitcoin ATM companies in the US. Unlike banks and stock exchanges, there are virtually no fail-safes to protect you if you make a mistake, he said. Cryptocurrencies allow you to be your own bank, which includes the responsibility of keeping your investments secure. That means that in addition to understanding the coin you'd like to purchase, you have to decide what kind of crypto wallet you're going to use and how you'll keep your password and other sensitive information safe. Investing with caution. Once you've got the basics of cryptocurrency down, there's another step: making sure you know how to trade it in line with your long-term goals. At the end of the day, if you're going to invest, treat it no different than you would the rest of your money, said Boneparth. This includes having a clear idea of where it fits into your overall financial plan, which you should formulate if you don't already have one, Boneparth said. Many new cryptocurrency investors have taken to trading their digital coins frequently, the CNBC survey found. About a third of investors said they trade crypto on a monthly or weekly basis, and nearly 1/4 said they trade the asset daily. That might be too often, as financial experts generally recommend buying and holding assets long-term as a solid way to build wealth. In addition, given the volatility of many cryptocurrencies, buying and selling often can increase the risk that you'll lose money on a bad trade or be hit with an outsized tax bill at the end of the year. Don't get it twisted when it comes to how fun and cool something is versus the real risks, said Boneparth. It may seem like simple words, but often the simplest of words contain the most power. Fear of the unknown. If you really want to boil down why some people love using crypto like Bitcoin and others refuse to use it, it's fear. Fear of what might happen if they take the risk and go in on it. Especially in the last 18 months or so, people have been more cautious than ever in regards to their money and what they do with it. Because, quite simply, they need it now more than ever. So, for something that honestly is rather volatile like Bitcoin or other crypto, it's just too much of a risk. But if that changes over time, then perhaps even more are going to get in on the market. So what do you think? What do you think of this look at how people that know about Bitcoin and other cryptocurrencies don't plan on investing in it? as well as how there are just as many who are willing to go and invest in it for reasons the other side won't consider. Do you find this divide a benefit to cryptocurrencies? Or do you think it'll work out in the end? Let us know in the comments below, and we'll see you next time.